Welcome back, dear traders. Let's discuss developments on Wall Street ahead of the Fed's policy meeting. InstaForex analysts are ready to share their forecast with you. For a start, last week was very successful for the US stock market. The benchmark stock indexes closed with weekly gains. Investors neglected downbeat corporate reports and gave priority to strong quarterly results of Apple and Intel. The Dow Jones closed in the green for the sixth sessions in a row. The S&P500 and the Nasdaq also displayed positive dynamics last week. The three major indexes traded notably higher by the closing bell on Friday, and the Dow Jones climbed by more than 800 points or 2.59%. The Nasdaq rose 2.87% and the S&P 500 grew 2.46% to close at 3,901 points. The benchmark indexes opened on a pessimistic note today. They traded in the red in the New York pre-market, signaling a gloomy session. No wonder investors are cautious ahead of the Fed's policy meeting. The S&P 500 is expected to trade in the intraday corridor between 3,810 and 3,920 points. Investors cheered the upbeat corporate earnings of Apple and Intel, as well as the record profits of the US energy companies, which pushed the stock market up on Friday. Apple stock logged the biggest growth since 2020, after the iPhone manufacturer had surpassed its sales and revenue forecasts. Even a decline in Amazon stock did not overshadow market optimism. This week, the fundamental background is not benign for the stock market. Several major central banks of Australia, the UK and the United States are holding their policy meetings. Market anxiety is fueled by fresh speculation on the size of a rate hike, worrisome signals of a slowdown in the global economy because of China, soaring global inflation, in particular green prices. The season of corporate reports is taking a back seat. Stock investors are riveted to the Fed's policy meeting slated for November 1 and 2. The regulator is widely expected to raise the official funds rate by 75 basis points. Following the Fed's meeting on September 2021, analysts predicted that the majority of the Fed's policymakers would vote for a slower pace of further rate hikes starting from December. All in all, the key interest rate could reach its peak of 4.50 or 4.75% in 2023. However, economic data has been mixed after that policy meeting. Inflation in the United States remains at elevated levels, but analysts have detected signs of a decline in personal spending and employment growth. On the plus side, the fresh GDP data revealed that the US economy expanded stronger than expected in the third quarter after 2 quarters of a contraction. It proves the resilience of the US economy amid a slowdown in the global economy. Under such fundamentals, investors are pricing in a rate hike of 0.75%. They will be more interested in statements by the Fed's policymakers. And today, on the final day of October, the US equity market is trading in the red. And this is true for the key stock indexes and the stocks of companies with a mega market capitalization. Obviously, the US dollar is benefiting from market jitters. The greenback owes its strength to global headwinds, inflation in the Eurozone, and the looming Fed's meeting. The US dollar index opened 0.6% up to trade at about 111.30. The intraday corridor for the index is between 110.90 and 112.10. High consumer spending and persistent inflationary pressure in the United States are widely arguments for the US Fed to go ahead with its aggressive monetary tightening. The greenback asserted its strength on a Monday and regained the losses incurred this month. Like Wall Street, currency markets are also in the wait-and-see mood in the run-up to the Fed's policy meeting. Interestingly, investors took notice that the Reserve Bank of Australia and the Bank of Canada softened their stance last week. Both regulators increased the key interest rates lower than expected. The market does not rely on the dovish reversal from the US Fed, and nevertheless, they will be alerted to Powell's press conference, looking for clues to whether the central bank will scale down the size of a rate hike in December. Meanwhile, the hawkish Fed and the firm US dollar are negating the loony success of the last week. The USD CAD pays are trading higher, having gained 0.5% today. The currency pays are likely to trade in the corridor between 1.3660 and 1.3710. Today, the loonie finds it hard to compete with the US dollar because of the dovish Bank of Canada, despite upbeat macroeconomic data from Canada. The loonie is hurt by the Fed's hawkishness and another decline in oil prices. Crude prices went down on Monday in light of China's weaker than expected industrial production data. It confirmed investors' fears that broader COVID restrictions in China would raise global demand. Crude imports in China plunged by 4.3% in the 3 quarters of 2022 from a year ago, and this is the first annual decline at least since 2014. In this context, Brent futures stumbled by more than 1% intraday, but regained footing by the American session opening. Brent crude futures are trading now at $95.52 a barrel, and WTI slipped to $87.55 a barrel. The crypto market is trading lower in parallel with the US stock market. Bitcoin was clinging to the intraday high of $20,600, but lost its confidence by the New York's session opening. Displaying its opposite correlation with the US dollar index, the token has already shed 1.55%. Most altcoins are also trading lower. Ethereum lost 1.35%. Solana, Ripple and Litecoin are trading mixed. The intraday outlook for Bitcoin is rather bleak. The crypto is expected to extend its fall within the corridor between $19,800 and $20,700. You've learned the intraday forecast by InstaForex analysts. The fundamental background is pessimistic and trade with the profits, no matter what trend is unfolding. Make prudent trading decisions with the InstaForex and see you online tomorrow.